Hello folks, Sid Miramontes here with Miramontes Capital. In this week's program, I'd love to talk to you about dividend strategy and what is your dividend strategy if you are retiring or retired and taking or going to take income out of your plan on a monthly basis. What you should be asking the advisor that you're meeting with is, what's your dividend strategy for me? One thing I want you to think about is, let's say you have $1 million in your portfolio, or you have $500,000 in your portfolio, or $5 million in your portfolio. If you are taking out income, the dividend strategy that you are living off of has to generate enough income to cover the withdrawals that you're pulling out. So for example, that just means that, let's say you have $1 million in your portfolio and you're pulling out $50,000 a year, or 5%. If your investments are not generating $50,000 a year in dividends or interest coming to you, what's going to happen, folks, is you're going to have to sell shares every single month. And over the last 3 months, folks, I've met with about 70 different new clients that were with other advisors. And I don't know if you'd like to know, but when we met with them, what was happening was they were investing their money in portfolios that had made about an 8% rate of return. But what was happening was those investments only paid a dividend of about 1.5% to 2%. And what was happening was, when you're retired, folks, you have to take out income every single month. So they had to sell shares. So for example, if they have $1 million and they're receiving 2% in dividends a year, they're getting $20,000 a year in dividends. That means they have to sell $30,000 worth of shares every year if they're pulling out $50,000 a year. So what happens is, as they sell shares, if the markets go up, they have to sell shares, so the price comes down. The value, the shares come down. If the market stays the same value, they have to sell more shares. They have to sell more shares, so the shares go down. If the markets go down, they have to sell even more shares. So sooner or later, over time, people start running out of shares. The reason why the investments made 8% while you were working or didn't need the money or weren't working, pulling any income out, is because there's no withdrawals coming out. Once you start making withdrawals from the plan, the whole program completely changes, because now the investments have to pay out income, where right now you're still hoping that the market's going to continue going up every single month for the rest of your life, and the market has to go up that month. The day that you're going to sell your shares to give you your income, if the market doesn't go up, well, guess what? You're going to have to start selling your shares and start running out of shares. So what has to happen, folks, when you meet with your advisor or whoever it is you're meeting with, they have to generate a dividend strategy that generates enough income, not just trying to grow the portfolio at faster than you're making withdrawals, because guess what? The market's not going to go up every single month for the rest of your life, and it never has. So what has to happen is it has to generate enough income, not growth, when you retire. So when you meet with somebody, ask them what the dividend strategy is, and if the dividends aren't paying enough to cover your income, you need another portfolio, okay? So hopefully that answers your question on dividend strategy. We look forward to your questions or concerns. Thanks so much.